There are many use cases now, very successful investment use cases, and I won't go through these in detail other than to say very briefly that there are good reasons why a lot of value is being captured. So if you look at number one, as I already mentioned, we need infrastructure to allow for the digitalization of finance and commerce, and that's being created by companies with names like Anchorage and Fireblocks and Kraken and so on. And these are digital custodians or wallets or marketplaces, and we're investors in all of those, are ones that we show as examples here. In terms of monies and commodities and assets, the same thing is true. We're taking things like SWIFT or Visa or MasterCard, and we're upgrading them into digital equivalents, which have names like Ripple or Yellow Card. And we're digitalizing monies like the US dollar into things like Tether and Circle, and we're an investor in Tether and Circle as well. At the commodity level, we can take gold, and you can buy and sell gold physically or through derivatives like ETFs. But we are now tokenizing gold, so you can buy and sell gold over digital wallets and digital infrastructure with things like Pax Gold. So we can do it with traditional commodities. Of course, Bitcoin and Ethereum are new to the world commodities, and we were early investors in them as well. And then you can do it with any other asset. So we can actually take any asset, like the example here, a money market fund from BlackRock. We can tokenize that and make that money market fund called BIDL be available in digital infrastructure anywhere in the world, 24/7. And that's why BlackRock's so excited by the tokenization of other real-world assets.
The globalization of asset tokenization is here, and don't take it from me. The man you just watched in that video is none other than Matthew Lemurley from Blockchain Coinvestors, which is a venture capital firm, and this guy has deep background and experience in investing in not only digital technologies, but revolutionary technologies. And that's where Swift may come into the play, because at the end of this last month in March, Swift put out an article talking about a strategy to enable instant and frictionless transactions, and that at the heart of this initiative, they have a corporates working group. This group includes 25 banks and 26 corporates from various sectors and regions. But here is where things get interesting, because this whole infrastructure and system is supported by a network of 8 technology partners who they do not mention by name, that is piloting new capabilities. And arguably all of those new capabilities when it comes to seamless, frictionless, and almost instant settlement will be done on the blockchain using the ISO 222 standard, which XRP is on that list. In other words, I can think of no better crypto or company to service this much of the world's new financial system than Ripple and XRP into the next decade, with regulatory clarity and total compliance inside of the United States, which is the world's largest financial market, as the world modernizes. And even though markets have been faltering, right now XRP is in a position to dominate, even if not on the technical side, definitely on the fundamental side, as financial markets are currently in fears of what's going to happen with the Trump tariff situation. But we're beginning to see some unusual strength, and right now XRP has its last chance to recover off of these local lows as it touched down back at 195. Otherwise, we're likely going to see more downside. The last few weeks, I've been calling for some new lows, as we're almost complete with a head and shoulders pattern and have touched back at the range of 195 for a 7th straight time. In other words, nobody knows what's going to happen. You don't know, I don't know, but the more that we touch this range, the more likely we experience a breakdown, which is still very much possible, and also why I'm being very cautious about entering with too much size. But here is what's happening. I'm starting to notice some unusual strength as dip buyers continue to support this asset off its 195 range, and I will explain it more technically near to the end of this video on why I'm going to enter with just a small, what I like to call pilot buy, just to test the waters. It's like dipping your toes, and if you can handle it, then you continue to enter more and more and more. And in today's video, I'll be covering the macroeconomic situation as well as that price action. Now, what we're going to be covering in the macro side is something directly from the mouth of the Treasury Secretary Scott Bessent on what comes next for markets under the Trump tariff plan, which could potentially turn into trade wars. So without further ado, let's get into the video. And as always, If you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the channel, my friend. If you're new here, my name is Paul and you can find me on Twitter or X at PauliDefi, PauliDefi. Now, what this gentleman over at Blockchain Coinvestors shared is actually quite interesting because it's a confirmation of everything that we already know inside of the XRP community. The only issue is we failed to see any of that news currently priced in, or better yet, it's probably already been priced in, and now we've just been seeing a consistent decline in terms of the token. In other words, sometimes not even the fundamentals can carry a price too much higher, and it still needs time to cool off and regain some strength, or better yet, gain a support before moving in for new highs. That said, from a fundamental perspective, longer term, XRP is probably one of the safest and best crypto holds in the entire market, as even the Motley Fool recently put out a post saying why XRP may be one of the only cryptos worth holding to 2030, especially off the back of this Ripple lawsuit that they've officially won and now settled. So then why isn't it all showing up in the price? Arguably that's because of the Trump tariff situation, which has led many market participants to total uncertainty. Markets don't like uncertainty, and so they've been consistently selling off. But as of recently, and we're talking like Friday, as you're watching this, it's probably Saturday or later, markets sold off pretty hard while crypto actually failed to sell off as hard and actually started pumping just a little bit. So yes, this strength as of recently is relatively unusual because you can see that we had multiple gaps down, even on the S&P 500 from 5,600 down to $5,000. These dumps were absolutely crazy and markets are in total panic and fear. But then when you take a look at XRP, you can see that we had 3 days straight of up. Now that said, we have failed to break into new range highs and actually saw yet another sell-off right here at about 214 to 215 with another small wick. So it remains to be seen whether or not we're actually going to start pumping. However, I am noticing some unusual strength, which we will cover here shortly. But really quickly, before we cover the rest of the video, the price action, what Scott Bessent shared, what markets are going to look like, where that strength is, head on over to bullrunners.com to check out Altcoin Pro University. We have 1,000 members that are paying to be here, and there's a reason for that. We have such a high retention because this is bar none the best educational platform on planet Earth when it comes to becoming a pro as a crypto investor. Now, whether you're looking to make your life simpler or looking for the right tools and resources to really put your money to work for you, we have everything you need here from a team of DeFi researchers and analysts that share all sorts of yields, free airdrops where you can pick up free crypto essentially just by being involved and active. We share altcoin picks. We do tons of live calls, as well as every Tuesday I do a live technical analysis call where I cover everything I simply cannot share or cover on this channel just because it would be too long. However, these are live, so people actually have access to me and can ask questions on these calls. We also have a bunch of courses and classes. Bar none, this is the best in the game. So if you haven't already checked it out, head on over to bullrunners.com to check out Altcoin Pro University. And just so you know, people are absolutely loving these calls. As a guy by the name of Michael inside of our platform said, another great technical analysis training by Paul. Thanks very much and appreciate your time. Or even this one review by another client of ours that shared that one of our DeFi analysts, Mo, has led him to a ton of cool opportunities, which quite frankly is netting him a few $1,000s a month. In other words, this guy is earning way more on the opportunities that are being shared here than he ever paid for the platform. Now, we can't guarantee you any results, but this is very much possible for you if you decide to take action now and take advantage of our bonuses. So one last time, head on over to Altcoin Pro University and you'll get access to all sorts of guides and courses and how-tos like the ones I'm sharing on this screen. Okay, I'll see you on the other side and let's get back into the video. So now what I want to do is share a few key points from a speech, or better yet, an interview that Scott Bessent, Treasury Secretary, had with Tucker Carlson. And in this interview, he states some major points that explains the likely outcomes and reasons for these tariffs, and also how it will have a long-term effect on the economy, and better yet, on our crypto bags, because they are still treated as risk on assets. In other words, they will trade very similarly or highly correlated to the stock market, as that has continually been the trend except for the last few days, which might be just a deviation off the norm.
So, I think that this is the beginning of a process. We're going to reindustrialize, that we have gone to a highly financialized economy. We have stopped making things, especially a lot of things that are relevant for national security. I think one of the few good outcomes from COVID was we had a beta test for what maybe a kinetic war with a large adversary could look like. And it turned out that these highly efficient supply chains were not strategically secure. So that we don't make our own medicines, that we don't make our own semiconductors, that we don't make our own ships anymore. So I think if I were to say, like, was there any good outcome from COVID? It woke the world up to these supply chain problems. So economic security is national security. President Trump and I have talked about that a lot. So this is a national security issue that we're seeing here, but it's also an economic security issue. And it's to, I don't want to say redistribute, but it is to give working Americans real wage gains and enhance their lives. And I've said out on the campaign trail, one of my most frequent mottos was, Wall Street's done great. It can continue doing well, but it's Main Street's turn. It's Main Street's turn. And that's what we saw yesterday. It's Main Street's turn.
In other words, they're treating it like national security and economic security. Again, these are things that in the case of, example, war, nobody likes it. And yes, markets will panic. But if you do not act in your best interest as a nation and protect yourselves, then in the long run, you're screwed. Still, markets panic. Well, then we're going to hear another key point on why the tariffs, although they might hurt and have a lot of people and markets in a panic right now, might actually be good in the long term. Let's have a listen.
The president suggested in describing his plan for tariffs, he said, look, you could conceivably fund a lot of government with tariffs. And that would suggest that taxpayers fund less of the burden. And so do you expect that these will be accompanied by a congressionally approved tax cut for the middle class?
I just want to go back for a moment, too, that one of the things that the tariffs are doing is we are pushing back against other economic systems. So the Chinese have a very different economic system. They have low costs. Some would call it literally slave labor. They subsidize industry with subsidized loans. They have a lot of non-tariff barriers. Your show can't be shown there.
Yes.
So we're pushing back against that. And with the tariff income, it can be substantial. And if we think like a classical model of tariff income would say, if there's a 10% tariff, then the currency would appreciate about 40% of that, so 4% of it. Then the producer in the other country would eat about 4%. And then the U.S. consumer might have a one-time price adjustment of 2%. So, in a 10% tariff, maybe the consumer pays 2% of it. We saw there's a study out recently from a group at MIT that shows that with President Trump's first China tariffs, which were approximately 20%, the price level went up 0.7. So to answer your question, if we could put on a 20% tariff and have the foreigners pay that and use that money to bring down our government deficit and keep taxes low here. That's a very unique formula that hasn't been tried in this country for a long time.
Now, whatever the case may be, and whether or not the tariffs are actually a good play, let me know in the comments. But it's obvious that markets really aren't liking it, especially in the TradFi world, as the Dow Jones is down heavy, the S&P 500 is also down heavy, and they're all very correlated. The NASDAQ is also down quite heavy. We're making new lower lows in a longer term uptrend, and things are getting pretty dangerous now for the rest of the market. Again, crypto failed to sell off, but that might be due to the fact that it was already selling off well before TradFi markets did. So it might just be leading instead of lagging. Still, XRP needs to break above the current range of about 215 in order to see a new trend. I am starting to see some strength here. So first, what I'm going to do is I'm going to put this line right here at about the 214 level. And as you can see, we have plenty of wicks into this range. We have failed to close above the range, and we've consistently been making new daily lows, except for the last couple of days. Also, into this rally, we've actually seen a bit of a decline in volume. But again, it's important to remember that it is the weekend, and the weekends tend to trade a bit slower, except for potentially on Friday. However, what I'm starting to notice here is quite interesting. If I come down to, let's say, that 4-hour time frame, you can see that we had a crazy amount of sell pressure right here with this candle and this large wick on the upside. Again, this is indicative of sell the rip type price action. In other words, investors saw the price pump pretty hard and sold into that pump, which caused this big old sell-off and this big sell volume bar. However, on this bar right here, April 4th of 2025, or this year basically, and just about a day ago, we saw the pump, and we actually saw quite a bit of buy volume as well, and this is on the Kraken exchange. But since then, we've remained below average on volume, coming right back into this key sell point right here on the market. So in other words, we have quite a resistance, at least in the short term, between 217 down to 214. And so when in doubt, zoom out. And then I go ahead and toss that 10 and 20 EMA up there. And as you can see, we are still being sold off at the 10 EMA. So it is possible that we come up to the 20 EMA or even slightly higher, up to maybe 230. But I would like, from a longer term perspective, to see XRP break above that 20 EMA and arguably above 225 to 230 before I even want to add some serious size to my position. And by serious size, I mean I'm already entering with a small pilot buy. However, I'm not going to be shocked if I get stopped out below this low right here at about 208. So that's kind of where I want to get stopped out. It's a very small pilot buy just to test the water. And the reason I'm making this buy, even though I think it's more likely we continue to break down, is because I'm seeing some relative strength in the crypto market. I'm seeing relative strength on XRP, just back at the zero line, but starting to tick up a little bit. But also because I'm actually seeing a bit of a bullish divergence on the actual RSI versus the price action. As you can see here, the price has consistently been declining, making lower lows, while on the actual RSI, we are seeing higher highs on the lows, or higher lows, I should say, on the lows. In other words, we're actually getting weaker and weaker and weaker into these sell-offs. So any retrace above that 217 level would likely take us up to at least 225 to 230. Then it remains to be seen what happens there. Again, I can't tell the future, but when I see this much touchdowns at the 195 level, I would actually like to see a recovery above 260 to be confident that we are starting a new trend. In other words, I would trade a small move up to 230, 235, somewhere in that range, potentially 225 if that's really where we're going. Again, this is a very small pilot buy for me. It's nothing major. In order to be confident that we are into a newer trend to the upside, would be above 260. That's where I will actually add a lot more to my position. But what's really unique and interesting is, again, coming to that 4-hour time frame, we do have quite a bullish divergence. Then when you look at the daily time frame, you can see yet again another bullish divergence. Right here, we have a lower low on the RSI on a daily time frame. However, when you look at the actual price action, we have multiple touchdowns and essentially a double bottom right here that is relatively flat. So when you see, and again, let me go ahead and make this simpler to see, you can see that we're putting in a new lower low here on the RSI, yet right here we are doing a double bottom, again indicative of strength. So yes, we are starting to see some strength. This could potentially be the bottom. This actual head and shoulders pattern may never break down below 195. However, I think it's important to prepare for the worst and still hope for the best, which is why I put in a little bit of a position, and I'm getting excited. I hope we break above 225 and 230 and definitely above that 260 range. Here is where I'll have supreme confidence in that next move. Still practicing risk management, but right here is where I'm just getting a little bit cautious, because if we touch back down at the $2 range, I think this thing is done, and we're definitely going down to at least 150. So that's it for the video, folks. If you enjoyed it, be sure to subscribe to the channel and also head on over to bullrunners.com to check out Altcoin Pro University. This Tuesday, I'll be hosting another live call where I'll dive deep into some technical indicators and also answer a bunch of questions. So if that sounds interesting to you, or any of the other things inside of here sound interesting to you, head on over to bullrunners.com. I look forward to seeing you on the other side, and I'll see you in the next video. Goodbye.